Hello everyone. Today I'm going to show you how I made $900, which and it really in reality it should have been 1,200 on Thursday. So I'm not going to waste any time. All right. So let me just show you exactly how I process everything. So I'm going to bring you back down to. Can you see me, or is this plant in the way? I always start with the week because you have to always remember that you are always trading a bigger candle on a smaller time frame. So I always start with the immediate analysis from the higher time frame. So let me get rid of these lines for you. All right, so what do we see? We see price has been in a bullish uptrend. We saw that these were this previous old highs that we were at back in 2021. Then we had the entire fucking bear market, blah blah. All right, so we broke out of this with this leg, right? Price came, retraced, and we broke out again. So now the 3 weeks the 3 weeks before the ultimate like crash that made everybody lose their fucking mind, like a bunch of minions from Despicable Me. Um, I knew that we were looking at this, and you might be like, why? Why was I paying attention to this point in liquidity, this swing low? Why was I paying attention right there? Because this, once we broke this with this leg, you're always paying attention to the this obviously this isn't the 50% mark, but you're paying attention to this swing low. You're paying attention to the middle, like the obvious middle part of the leg, or the middle part wherever the liquidity is, right? Because or three steps, one, two, three, in any leg. You're 9 times out of 10, price will usually disrespect all of these inefficiencies and come for this before it really starts trending higher. In the moments where it doesn't happen, you always just want to watch that inefficiencies are used as support rather than resistance. So if you see the bodies of candles, so let's talk about in the instance where we're not coming for this. Let's say hypothetically that we're gonna respect this FEG, right? I would have wanted to see bodies close only in this area. The wicks, I don't give a fuck, but the bodies didn't. So then automatically when I see that this FEG got violated, I'm immediately looking to the 50% of any leg. When I say 50%, remember, I'm only saying like the swing in between. That's all I am paying attention to. Right? Okay. So I pay attention to the higher time frame bias, right? After I determine the bias on the higher time frame, I go down to the daily. So was this? Yeah. Okay. So we're still on Thursday. So we came down here, and just to give you a little bit something more advanced, any single time you see accumulation, manipulation, distribution, you are always paying attention. Accumulation, manipulation, distribution is the equivalent of the market like always confirming to you it's about to do something. That is the edge that you have. PO3 is the edge that you have. I am not joking when I say that. Power of 3 is your edge at all times, your best friend. Power of 3 is always insinuating that we are near something. I knew that this market was topping off because I saw accumulation. We had been ranging for a little bit, and when I saw this as being the manipulation, there's oh, sorry. Mm. I knew that this was going to be the manipulation leg, and then we were going to start moving down lower. Same shit here. We go down to a lower time frame. The liquidity point that I had pointed out on a fuck me, bro. The liquidity that I had pointed out on a higher time frame being here, this is a key level. Again, what I just said about accumulation, manipulation, distribution. Accumulation, manipulation, distribution is always insinuating to you that something is about to happen, right? So I saw AMD right here. Accumulation, manipulation, automatically looking at here. And see, this is the power and understanding to work from concepts. Always trade through concepts. When I trade, I do not trade price signatures, I trade concepts because the algorithm will always violate price signatures but will never violate a concept. Now, what is the difference between a concept and a price signature? A concept is SMT, right? When Nasdaq takes highs, ES doesn't. That is the equivalent of the algorithm. Like you're literally inputting in the code. We're done taking highs. Now go to the real draw on liquidity, which is usually in the opposing side. That is a concept. A price signature is somebody just continuously trading any bullish order block because they think it's a bullish order block. That does not work. Shit like that does not work. For example, somebody trading price signatures will not be able to know that this bearish order block is not going to stand. Now, why would I not believe that this bearish order block is going to stand? Because on a higher time frame, we had SMT. So on a higher time frame, SMT is going to automatically make me draw up to here, and we had CRT. CRT is gold. But I'll get into that, in a different video, or at least try to do justice the way Romeo would. I would hope appreciate it. All right, so let's get back into the day. So, that's the higher time frame bias. So I'm bullish, right? When you are paying attention to higher time frame order flow, institutions are running this. They operate on the hours, the days, and the weeks, right? Or at least the 4 hour, the day, and the week. To move against them is genuinely stupid because the retracements that you're trying to take advantage of, and just me speaking from personal experience, right? Let's say we're bullish, but I'm still trying to go short. I've even done it on my live. It's stupid as fuck because those retracements are limited. They're only bringing them down to a specific point. When they're really expanding, those are the trades that you want because they're effortless and you're making money being in sync. It's just the money that you're making is just a byproduct of you being in sync with price. And a lot of people, they try to be opportunists and always take advantage of every little thing, but that's gonna fuck you and create bad habits. It's just not good. So, we go down to the hour. When we go down to the hour, I see that we're accumulating, and this kind of made me sus, right? Because of what I said before. Accumulation, manipulation, distribution is insinuating that we are about to do something. So I see this, this rejection block, and we're tapping into it. So a piece of the game for you guys is that the market is almost like a pinball machine. A pinball machine always has a reaction. Wherever the ball goes, like there's a reaction. It's the same shit. So we are 100% going to come up here, but the thing is, the market will acknowledge this order block and take that reaction to refill this inefficiency. I don't remember if it did exactly that, but that is real. You could backtest that. So, all right. Let me put everything back on because I just set up my thing. So, the next thing, once I get down to the hour, I'm paying attention to the weekly time frame. So remember, open, high, close, open, high, low, close is the most important thing. Because it is the market. The market is comprised of candlesticks. Every candlestick has an open, high, low, close, or open, low, high. I mean, open, high, low, close. Um, I pray I didn't say the same thing twice. Um, so we saw Sunday open, low, Monday. I know ICT and other traders say that Tuesday and Wednesday create the low of the week, but that's not true in every single case. Um, so open, low. I saw that on Tuesday we just expanded higher, and then on Wednesday we staled out. So Wednesday is usually the expansion day in any candle. I mean, in the weekly candle, right? So remember, every single candle is a fractal. Every single candle has its moments of expansion. So for the weekly time frame, Wednesday is that day. Wednesday is the day where we normally expand. But, and I'm glad that this week this happened because it's a perfect example. If Wednesday does not expand, Thursday will. If Wednesday does not expand, Thursday will. So I anticipated that. So I break down lower. So we're already present day moment. It's 9 o'clock, right? I marked out my AM silver bullet. I always like operating you know in an organized way. It makes everything clear and easier, and you're just able to see things 10 times better. So remember, I had anticipated this to be accumulation, and I was anticipating this to be the manipulation leg into the draw on liquidity, being 5600. Also, another thing that made me bullish was the fact that on any market maker model, um, what I say in the last stage of it, you are gonna see AMD. You're gonna see accumulation, manipulation, distribution, and you'll see price like accumulate and just effortlessly hit that. You will see that if you backtest it. So I saw that we were closing into like the final stage. So I was just looking for an effortless run up here. So anything I knew I I thought because of this news candle we weren't gonna come back down here, and I was correct to think so. So I was just really looking for like the lowest point, but I wasn't compromised. I wasn't gonna compromise on what I wanted, right? So 9 o'clock came. 9 o'clock, 159. If you know, you know. I'm not gonna explain about it too much, but mark out 159 and back test that. And if you don't see it, that's because you're doing something wrong and you need to spend more time with it. So Um, where was I? Okay, so 9 o'clock hit, right? I ended up taking the trade, I think, around like 10 something. You see price opened, 9:30 is market open. So we came, right? We came up here. So the moment 9:30 comes, I'm not doing shit. All I'm seeing, and I mean, all I'm watching for and looking to pay attention is to see where is price bringing the idiots? Where is price bringing dumb money, right? And usually 9:30 has um, two scenarios where we are going in the direction of the day, but it is getting people overzealous and making like gonna bring them in drawdown. So it's pretty much leading them to place a position so they could bring them in drawdown forcefully. So they have the direction correct, but the timing is incorrect, and that's why time is king in the market. So that's all I'm paying attention to. So I see that we're moving into the right direction. So I automatically am thinking, okay, the market is fucking everybody. And I immediately start pinpointing this FEG because we purged this liquidity, right? Then I saw CRT. Something that I refer to as purging techniques. I'm gonna get into that. I'm actually gonna probably record that video today because I've actually been wanting to talk about that. So I'll upload it soon. But anyways, we see a purging technique and we see a price takes this buy side liquidity. Then we see CRT, right? You will usually see CRT whenever this fucking cap. You will usually see CRT when we purge. CRT will be one of the purging techniques that you will see when price is either purging buy side or sell side liquidity. So the fact that we did that at 9:30 is already a red flag for me. Anybody who's up here, I'm like, you're fucked. So I'm automatically paying attention to this, right? Now, in hindsight, my focus was in the wrong place only because Nasdaq ended up taking those lows and ES didn't. Hold on, I'm having a brain fart. Sell side, boom. All right, and then buy side. So boom. We took this 5 minute FEG. And for those who don't know, my favorite time frame is the 5 minute candle, and I mean a 5 minute time frame and the 15 minute time frame. 15 minute time frame is my absolute favorite. That is the king. 5 minute I'll use for entries. So, anyways, 9:40 came, and when we hit into 9:40 to 9:50, I always pay attention because 9:40 and 9:50 is often the earliest time that institutions will provide themselves the highest or lowest opportunity, even before the AM silver bullet. So I'm paying attention, right? In that moment, little did I know that this was the best entry. I was anticipating this, but I didn't get it. So I wait, right? Notice this FEG. Remember how I said what I said earlier? In any price like that violates an old high, swing high, you will usually see the midpoint. You will see the midpoint be hit. In this case, we didn't see it get hit. Why? Because this FEG acted as support, right? These are fundamental things. Like when FEGs are going to hold or be disrespected, depending on how the candle closes. And a lot of people try to create um, the decision or try to anticipate what's going to happen while the candle is being created. That's wrong. You will continue to fail. So I saw this. I placed the trade right here, literally right here, and I got stopped out and with a tick. My stop was like right there, and it hit it, and I was like, "Fuck." Then, I believe I got in again. Where did I get in? Oh no, we ended up. I believe I don't even know what I'm saying right now. Okay, I remember what happened. So yeah, I'm gonna show you the video in a second. So we took this liquidity, poor reaction. It was at 10 o'clock. So I'm like, okay, market's gonna give us an opportunity. So I was paying attention to here, still here and here when I saw this, but then it still didn't break. So once I saw that, I ended up taking this trade. Um, I was mad as fuck at myself in the video. I'm gonna play the video right in like in a second. Fuck it. I'm breaking my rule by placing on up close candle, but I think it should have been down here. That's such a big fuck up. Bro, it's literally like 5 hands. I'd already be up like fucking 120 bucks right now. I want to see this become inversed. Alright, I made an order block. So I would have already placed my first trade down here, but I was too pussy. I literally called it and still didn't do it. And then I saw this and I was like, okay, bet we're good. Excuse me. Okay, we're gonna have to close the trade soon. Let it punch through. I want to see this 15-minute candle close above it. If it doesn't, that's fine. I think I'm just gonna take 1,000. Fuck it. Um, I literally called it. It was like supposed to be right here, and I placed the trade like somewhere right here. I was like, fuck it. Had two contracts. Placed this. I saw 1100, but it wasn't reacting the way that I wanted to when we hit the liquidity. I didn't take the 1100. I took 962. But yeah, that was pretty much the trade of the day. I cut it because it was on Top Step. But if it was personal, boy, I would have held this. I would have held this shit to the fucking moon. And then fast forward, what's it called? So next week we ended up coming up here. So yeah, that's pretty much how the trade ended up going. So now for the video, just to show you guys how everything played out. Here we go. So I took the trade as you see, right? I'm pretty sure I'm in 2x mode. Yup. We see, boom, boom, boom. I was up for a little. Okay, we got stopped out. Literally right when I got stopped out. Come on, stop me out. There you go. Yeah, it didn't go lower than that. So to the people out there who struggle with getting stopped, like marrying to bias, essentially, um, I'm gonna make a video, going over all of that. But what I will say is, you you have to force yourself to only trade in areas where you want to see it, not in anticipation or not just because we're up and shit like that. Like no, marrying to bias is usually what leads to poor risk management and then often leads to you blowing your account and then a sick cycle. So, anyways, we got to stop out of that trade. But I was still bullish. But notice how I did not take any trades because it wasn't anywhere. What if we are not purging liquidity or rebalancing an inefficiency, which we had already done? We just rebalanced an inefficiency, so there's only one opportunity, which is one outcome, which is purging liquidity. So if you are not doing anything else, you are accumulating. I only took this trade because I just realized in that moment, fuck, I was um what's it called? I didn't take advantage of the inefficiency, right? I just didn't have the foresight. So then I waited. AM silver bullets about to hit 10 o'clock. Then I see this happen. So I see price. We took this candle's buy side liquidity, but we still had this, and we created the bear shorter block. So this is also another purging technique. Now people might say, "Oh, sweep liquidity and bear shorter block." No, I'm telling you, there are different purging techniques. There are different types of order blocks that get created once we purge liquidity. So, anyways, I saw this order block immediately. This specific sequence, this specific price signature where we take this candle is created and then this candle takes both the high and creates the order block. That is one specific. I call that one the final order block because once you see the final order block, it's the final thing that you see before you just have a low resistance liquidity run. So I automatically was paying attention to here. In the video, I put this as the input. Like I wanted to see it get hit. But I was a vagina in the moment and I didn't do it. So I was a little late. Come on now. So look, I realized I'm like fuck. And then yeah, pretty much the rest is history. I added a second contract because I just knew that this was gonna hit, and also the SMT confirmed it. So once I saw that, I'm like yeah. So now P-Pow, I did not place. I look, I placed the second contract on a down close candle. Look, hold on. I placed the second contract. Once we closed that candle, I placed the down once we closed the candle, down close, first one. The first second I saw it down close. Never place a long on an up close candle. You are going to fuck yourself. So yeah, pretty much. And then look how we see another final order block to those who probably scoffed at what I just said, thinking like I just created some bullshit. No, I didn't just pull that out of my ass. That's some real shit, and you could back test that. So we swept this liquidity. This candle, this order block took all the liquidity. So it's like CRT and an order block combined. That's why it's so powerful. So because that's usually what CRT does. CRT will usually raid the candle that purged liquidity. CRT will either uh, purge the high or lower that candle. So that happened, and we created an order block on top of all the bullish confluence. And this was a buy side imbalance, sell side inefficiency, and I was kind of anticipating it to be a breakaway. So yeah. So anyways. Yeah, that's pretty much it. I anticipated for this candle to be, I mean, this fair value gap to be inverted, which it later was. I called this entire play to the T on my YouTube, on my live. I'm not gonna include the audio, but if you want, you can just go onto my YouTube. I'll probably link it. But yeah, we did it. I was patient for also all the people out there who, for me personally, who have a hard time like looking at profits. You don't know what the fuck you're doing. I saw I literally saw $500 and that shit would like retrace. I didn't flinch at all. I didn't flinch at all because that is the importance of backtesting. Back confidence in trading only comes from backtesting and knowing. As human beings, we tend to want to control things, control the outcome, and that's why we get so upset when things don't go our way. It is because you don't know what the fuck you're doing. You're feeling anxiety. You're feeling like insane shit in that moment because you don't know what the fuck you are doing. And until you are a man enough and and can sit with yourself and be like, damn, I don't. Only then can you start really making progress. Like you have to understand, and I'm saying that because a lot of people go through that shit. Like you feel anxious. Like I didn't give a fuck throughout this entire trade, like because I knew what these concepts and price signatures mean. So yeah, that is what allowed me to perform and see these numbers. Like it's just regular, bro. I didn't feel a single thing. And then once we started coming up here, I should have placed my stop loss up here, but I was pussy as fuck. We ended up we literally in the same day came up here by the New York session, and we did not revisit it. This trade, if it was on a personal account or if I just let it run, it would have hit like $3,000. But yeah, I didn't take that in that moment, but I realized that it wasn't reacting the way I wanted it to, so I just took, like I said, the 962. So, yep, that's pretty much it for the day. If you have questions, comment it, I'll answer it, or just make videos around those concepts. But yeah, that's pretty much it. Goodbye.